Okay. Hi, everyone. So it's going to be another one in English, unfortunately. So my name is Yann Ranchere. I'm working for an investor called Anthemis. We invest in financial services startups. We have about 22 companies in our portfolio. None of them at the moment in Switzerland, to be fair. They are in the US, Europe, and a bit developing countries. And what I want to discuss today is like this incredible opportunity that exists for startups to tackle the financial services problem, because this is about New Finance Conference, so let's talk a bit about the future. Okay, it's going to do it this way then. This is now. We're homo digitalis. Everyone's becoming connected. This is a reality. And what's amazing is that the time frame between these two images is probably very small. And this is actually a phenomenal revolution and a big change. What we're seeing is the combined effect of Moore's law, so increase in processing power. We're seeing Crater's law, which is storage, internet, cloud. We could see that, for example, Amazon Web Services, if you know a bit, there's the hosting service for information from Amazon. They basically can make money by lowering their price, because technology increases at such a pace that actually it becomes cheaper and cheaper to do more computation, cheaper and cheaper to store more data. So you actually have, it's becoming cheaper and cheaper to create technology and to create technological startups. And you have these things, I mean, if you put it in perspective, we have the iPhone 5 is more powerful than a laptop from Apple 6 years ago. That's just puts things in perspective. These small devices has more power than a top-line Apple just 6 years ago. And you remember things from 6 years ago. This is quite phenomenal. But this is just the top of a bigger change, in our view. And that bigger change, we can try and understand it through the work of an economist called Carlota Perez, which wrote a book called Technological Revolution and Financial Capital. And basically what she's looking at is the relation between technological changes and economic and social changes. And what she looked at through history, that we're going through several phases of main changes driven by technological disruption, and then going to impact how the society and economy is changing. The first being the Industrial Revolution, starting with spinning Jenny, and the way she sees cycles, and we're always going through the same, while each of these revolutions is different, we're always going through the same cycle, which is we have a technological revolution and side revolutions around that, going through high growth, a huge crash in the market. So we saw that it was the canal panic and the crash through the Industrial Revolution, and then a slower growth phase, where actually economy and society is being changed and impacted. And we see that through various cycles. We see that through automobile, oil, and mass production. And now the question we can ask ourselves is, are we living the same? Are we just living the same situation right at the moment? Is we're experiencing the crash of the information and telecommunication revolution. And you can argue it, especially in the financial crisis, is that all of the instruments, notably the instruments that have allowed us to go through this market crash situation, is definitely linked to technology, to the capacity to trade more complexity. This is driven by computers. It's very difficult to create complex products if you don't have an Excel or a computational engine. So the question then is, what's coming next? If we are through the painful path of this small abrupt crisis, we're going to stop and rebound and building a new form of society. And the whole question is, what's the new society we're looking at? Is it more network, more connected? How is the economy going to change around that? Are we seeing less of those big vertical companies and more of the small horizontal companies? And actually, how is society going to change around that? What is the political organization of the future? The fact that everyone can communicate at the same time and share ideas, how does that impact society? That's one of the main changes we're looking at. The second change is we work we live in a world of exponential growth, exponential change. And that's very difficult. Our brain is somewhat formatted to understand linear processes, but it's very difficult to understand how exponential is impacting us, the scale and the rapidity of an exponential change. And we see that currently, this is mobile traffic as percentage of internet traffic. This is not going slowly. This is just going faster and faster and accelerating. Smartphone mass market is about 5 years old, 6 years old, and it's becoming a huge part of the internet traffic at an increasing pace. These are the adoption curve of Facebook, Twitter, and LinkedIn. This is from 0 to several million in just a few years. And once again, it's very difficult to understand something that didn't exist 3 years ago for any company, for any people to adapt to that. Something that doesn't understand 3 years before is becoming mass in just a 3-year time frame. And this cuts both ways. Exponential growth, exponential failure. This is the profit and loss of the US Postal Service. This is abrupt change we're living through. Those companies are going to fail quickly and very quickly. We see the same in media, in production. We saw company failures, like the equivalent of La Fnac here in the US closing because the market is changing at an incredible pace. So this is why it may seem slow in the beginning. The change is accelerating at some point, and this is going to have a strong impact over a few years. So the big question when you live in an exponential world is what next? Because the pace at which you can understand and integrate those changes is becoming very, very high and difficult. In financial services, we're seeing all of this coming into play. We see big data, so the use of massive data sets to create insights, crowdsourcing. I think we're going to have more about this in the conference. Peer-to-peer is the same. We see apps being used as a paradigm for financial services. They're being used for a paradigm for phones. Gamification, so the use of gaming in financial services. Can we improve how people manage finance via games? Consumerization, the fact that most of the program you use currently, if you work in a bank, this is particularly true. Facebook is probably the most easy program to use you currently have. If you try to use on the back office system of a bank, this is just an old frame screen where you sometimes can't even use your mouse. You need to put you on the keyboard. And people are becoming more and more aware of that because the tools they use in their life are better than the tools they use in their office. And this is actually quite new, right? If some years before, you had a computer in your office, you had the best tools in your office, and now it's become entirely reversed. You probably use an old version of Internet Explorer. You probably use an old version of a mailbox. Your Gmail has your personal Gmail has unlimited storage. Your professional Gmail or mail is probably limited to 15 meg or something, so you need to archive. This is just amazing that doesn't work the same, right? Companies that's supposed to have more purchasing power have less optimal tools than you personally for free. And we have disaggregation, meaning those big banks are becoming segregated. You have smaller players addressing each part of the market. The peer-to-peer financing, for example, is an example of that. And we have everything as a service. You can subscribe. You don't need to put a lot of money on the table, have a lot of capital requirements, just subscribe to a service for a monthly fee. So to say that a bit differently, 91% of millennials expect to stay in job for less than 3 years. The first question someone asks when you try to buy a home, what is it? How long have you been in your company? Show me your salary sheets. And how long are you a stable person? What becomes when the world is becoming unstable? Do we stop making loans to people? I mean, that's a solution that we somewhat see currently. Is that sustainable over long term? I don't think so. Gmail probably has create favorites for you now, telling you what to read in your mailbox. You still need to manually move your money from your checking to your saving account in most cases. To enter all those fields and put the savings at the month's end and really calculate in your head how much money you have spare, how much you need to put on your savings account, and do those small adjustments by hand. It's quite crazy when you think of it. Facebook updates its code twice a week, its UI probably bi-weekly. I would expect years for some banks, actually. There is a big disconnect between how financial services world is evolving and the world most people live in currently is evolving. That brings an amazing opportunity, an amazing ecosystem of startups. And some of these startups we've invested in. We have startup in personal finance. Olvi is going to present later today. We have a bank like Simple, Moven, Fidor in Germany, Billgard. Simple is, for example, a bank that automates all your finance for you. So let's say you want to buy an iPad in 9 months. Put a goal, 600 Swiss francs, and it will start pulling out daily that amount from your account. Not really from your account, from your what they call your save to spend balance, which is a balance that gives you how much you have and how much you actually have. So the current bank balance you have tells you how much cash you have on your account. The save to spend balance tells you how much you can really spend. So it looks forward for your main cash flow. When is your salary coming, when you pay rent, and calculates the actual balance you can spend at any moment. So if you put some savings for Simple there, for an iPad, that will deduct it from your balance. So that will prevent you from spending that money when you've decided to create a goal. We see the same happening in wealth management. Betterment, for example, is a very simple investment product. You just subscribe, you define your risk level, you subscribe to the product, and they do what all investors should do, which is rebalancing. So automatically, whenever you make gains on a specific product, they rebalance it so you stay the same exposure toward the market. Blueleaf is a platform for wealth manager. Nutmeg is automated portfolio for investors. We see the same in business banking. Kickstarter, you may know, has an amazing place to raise funds for hardware and cultural. Cabbage is a lender for eBay merchants. And basically, it looks at the sales of an eBay merchant to lend him capital automatically. So the sign-up process is about 5 minutes. You get the funds in 2 days. And the acceptance is in 5 minutes. If you try to negotiate a loan as a small business with your banks, this is quite amazing, actually, come to think of it. And basically, they take all the data you have from Cabbage. They take the data from your postal service to look at the things you send to your clients, and they calculate your risk and how much you can repay, actually. Receivable Exchange is an automated platform to sell your invoices. So let's say you have several invoices coming in for you, and you have to manage cash flow. You can sell them to investors for a discount, get the money now, and repay back when the invoice gets paid. Wonga is a personal finance, but now evolving to small business loan. On Deck is the same. It's like about 10 minutes decision on a loan for a business. We see the same in payments. Square, if you haven't heard of Square, it's I don't have it with me. It's a basic tool that allows you to accept credit card payment on your phone. So I can show it. I have it with me. You can plug a dongle in it, swipe the card, take a payment. The registration is the same. It takes 1 minute. You receive it by post. The Currency Cloud is one of our investments. It's the startup that does foreign exchange automated for companies. PayPerks is a startup that does prepaid card for people, unbanked people. So in the US, about 15% of the population doesn't have a bank account. So they allow them to be paid by a prepaid debit card. So they can actually use it to pay online and spend while not having a bank account. M-Pesa is probably heard of M-Pesa as well. It's the mobile payment, the most successful mobile payment solution probably in the world, and is in Kenya and has had a very strong impact on actually the structure of the Kenyan society in some ways. ICANN2 is a point of sales application developed in Switzerland that allows people in restaurants to have a very user-friendly and easy and connected point of sales versus those big bulky machines. You need people to come every year to change the code in there and do any edits and change your menu and these kind of things. We have Mobino as well on mobile payment. And you see the same in trading. eToro is social trading, for example. So you can follow traders and do the same trade as they do. So you look at the trader, you look at his past trade history, if he made money or not, just copy his trade, one click. You can do Estimize is startups that does competition around estimates of how a company is successful in the quarter. You know, the company do their quarterly results. You can bet on how much revenue they're going to make and those kind of things. And you have the same in the risk management world. The Climate Corporation is a very interesting company that does one-click weather insurance for farmers. Basically, they've mapped out weather patterns of the US. And so if you want to insure your crop against catastrophe and those, and you know, too much rain, too much sun, and those kind of things, you just mention what's the location, what type of crop, and they produce an insurance for you instantly. All of this is possible because we need to develop a core layer that allows all this innovation. And that core layer is also, as well, is web services, but it also banks. Banks don't disappear in this world. Most of the startups I presented are based on a bank. But these banks are more of an infrastructure player. They are the water supply of the new finance. It's the same for crowdfunding startups. You need banks to hold the funds. This is actually a very tough and difficult job to secure funds. And this is a job that banks still have and will still have in my view. But we need them to be more aware that they can disintermediate and allow innovation to happen on top of them. So I think we live in a quite phenomenal time. Quite interesting, quite stressful at the same time, but quite interesting. And the big question you have to ask yourself is like, do you want to do incremental innovation, building faster and faster horses, or do you build a car? And in my view, what we need now is entrepreneurs that work on the right side to solve our problems and make, I think, the next revolution in financial services. Thank you.
Thank you very much for this interesting presentation. Are there any questions?
My name is Yann Ranchere.
Yeah.
I was wondering, we've seen many companies. I don't think there were any companies from Switzerland on your slides. Do you have an explanation for that, or?
There are a couple of companies in Switzerland. To be fair, this is quite new. We've been working on this officially the last 3 years. We've been interested in this field. And we're seeing over the last probably 1-2 years is many people starting addressing the financial services problem. I think the main reason is because there were lower hanging fruit before. It's easier to attack commerce, e-commerce. It's easier to do other things than financial services because it looks very difficult from the outside. There are a couple of startups that I haven't mentioned. There is a company, I can remember the name, that does launching a mortgage broker type product. There is ICANN2 that does point of sales. Mobino is based in Switzerland. But in some ways, the fact that the banking sector was so strong, there was a lot of innovation effort to support the existing players. And maybe one of the opportunity in the current difficulties of the Swiss banking market is that we'll have more people with the right set of skills thinking out of the box and we can see more innovation on that side, I think.
Thank you. Some more questions?
Tuomas Stoner from Holvi. You had interesting slide about the infrastructure layer, but many of the players on the infrastructure layer powering many of the startups are also quite new entrants. It's not the traditional banks. So why are the large global transactional banks who have really a global footprint and would have the infrastructure to provide services for startups and other companies to build the user experience layer? So why are they not providing the interfaces, the APIs, which they definitely could do?
I think there's two things. First thing, they have big problems that they are very focused on right now, which is they need to change at the same time, and what they believe is they can change internally. They need to do the full change internally, and they're entirely focused on it. The second thing is, and it's a bit of a paradox, is that in retail banking, the idea that you can be just a support. I mean, we always say dumb pipes. I think it's a horrible name because people think it's a bad business, but being a pipe is actually a good business if you use the right structure to do it. It's something they don't know how to do in retail banking. What is strange to me is that it's something they really know how to do in other settings. If you look at how funds work in financial services, it's a very segregated players. You have a custodian, which role is to hold the funds and hold the securities. Then you have intermediaries, which calculate the value of the funds, and you have people who do the investments, and you have people who sell the funds. And all of this is very segregated and is a relationship between different players. And this is something that they know how to do, but they don't know how to reproduce in retail. That's, I think, a big opportunity. The issue is you need a lot of capital to launch a bank right now, in a time where it's very difficult to raise capital. But we've seen in the US, at least, small players. When you see an ex-Googler buying a small local bank, kind of raise the questions. Why is he going to middle of nowhere America to buy a bank license? I don't think it's for tourism. If you know Oklahoma, it's not really for tourism at all. But these guys, ex-Google engineers, went and bought a bank. Kind of raise the questions what they want to do with it.
Thank you.
Hi, Dave Brown. Do you see bigger things happening in the US or in Europe?
Both, for different reasons. If you look at the US, for sure, as you said, it's a big market that everyone behave and consume pretty much the same. So it's very attractive for that reason. It's a single market when you can get scale quite easily. At the same time, from a regulation perspective, for example, in payments, it's a horrible market to work with. You need a payment license in each and every state you're going to work in. If you look at Europe, they kind of solved this with the e-money legislation, for example, and SEPA will make Europe a single market. So make more attractive from a payment perspective because you can really address the markets in a single scale. We see a lot of things happening in developing countries where people leapfrog existing path to create new services. It's pretty much, yeah, the US for sure, because there is more capital and engineers and drive, but we see a lot of interesting things elsewhere as well.
Thank you.
Lucas Brutsch from PostFinance. The traditional banks in Switzerland use most of their resources not to get the technical improvements, but to stay or getting compliant with all the regulations. Is there a key how all these new providers of banking or financing services get this point? Don't they have the same burden to bear?
Most of them actually relies on banks for that. So if you look at Simple, it doesn't have a bank license, but it works with a bank under them. There is a case that we actually need less regulation in financial services, which is a bit, tough to say at the moment. But come to think of it, it's very difficult to create a bank. It's impossible. It makes a market of, Switzerland has more players. If you look at France, there is about 3-4 banks. doesn't drive competition, doesn't drive innovation. You can stay there, do your things, and make money. Less easy than before, but still have a quiet life. You're going to cut off people, reduce cost, and try to make it out of this. This is really what they're thinking at the moment. So you could have an argument with the regulator saying, make it easier to create small financial services. Make it easier to have competition on the market. Not for big players. There is definitely a path where you're too big to fail is a big problem. You can't really make it impossible for people to fail and get paid by the taxpayer. But you can make it possible for smaller players to fail. So do you want to launch a payment service? Do you need a full banking license for that? No. Do you want to launch credit? What exactly you need as a regulation? And I think there is an argument to be made with regulators saying, if your focus on regulating big banks is important, but you can allow as well smaller players with less risk to be more easily created.
Thank you. One last question.
Lucas Weber from Investiere. Do you think that banks will sort of disintegrate completely, just like Amazon Web Services did with storage and payment and computing power, that eventually, you know, it's all modular and there's no big banks anymore, just some guys doing, you know, deposits, some guys doing credit, and you can all sort of access that from the outside world as well?
That's the vision.
Or is there a need to, you know, to stay sort of monolithic?
There is a need for being a highly regulated industry in some categories. And I think you give it to banks for that. They lose money on payments, but they always find it. They haven't lost most of your money, which is kind of an amazing thing when you think of IT and programs. It's all digital and they haven't lost any of your money. What last time you have a file that has an issue, it's quite recent. So there is a need for high regulation. There will be players who will want to play vertically, thinking, you know, it's a strategic argument. You could say vertically integrating is more efficient than horizontally integrated. What I think we're going to see is more diversity. We're going to see some of the existing players surviving in a vertical structure, some of players playing the horizontal structure. I think it's going to be the same as we see for payments now. It's going to be a big mess. Interesting one, but a big mess of very small players. It's the diversity, I think, that's going to be the main driver over the next 10, 15 years, in my view.
Thank you very much.